Welcome to Markets Now. I'm Michelle Rook along with Brad Kooima with Kooima Varilek, and we're seeing mixed trade in the grains and the hogs. Cattle futures are lower this morning. And Brad, that's where I want to start with cattle. We had a higher weekly close last week, but yesterday it looked like some profit taking and maybe a little risk off here with what's been going on with the bank failures and the Fed meeting this
Well, I
week.
think that's a good place to start, Michelle. Thanks for having me on. Always get a kick out of this. So, we had the big up, and then we had walked the market sideways here for a couple of weeks now, consolidating, getting used to this level, whatever you want to call it. And in some ways, I think, because you're going to hear me make some more negative comments than normal here, but in some ways I do want to highlight the fact that you get an extremely oversold market like we have, market that went straight up, and the only way they can correct it is by going sideways is not a bad sign. This is not exactly your classic V top or V bottom like you often get in a cattle thing. So I think the market is generally, from a big picture standpoint, in good shape, but you have to rest once in a while.
Right. And we shook off a lot of negative news last week, including lower cash.
Absolutely. And the cash market, a trader looks at the cash market, and you got to remember, a lot of these traders don't know the difference between a steer and a heifer, but they go, okay, well, it was 185 2 weeks ago or 3 weeks ago, and then we lost a couple dollars, and we lost a couple more dollars. And so it looks like the trend is that we're going to slowly erode on the cash, and it would not be the first time. Basis in May is we're at actually a kind of a normal basis where we're discounted like we always are. And unfortunately, what often happens is convergence largely happens because cash comes down to where futures are. I'd like to think this year we're probably going to do a little both because I think the supply of cattle as we move into May and June here is still in the north, much less than what most traders think. And we're as current as we've been arguably since 2014. So, I do think we have just a little bit of reason for optimism, but the short term of the market, you got easy sellers, it seems, Michelle, and that's going to be a bit of a problem.
Right. Talk about the fact, though, the north is running premium to the south, and that premium widened out here over the last week, didn't it?
Yes, and why? There's probably multiple reasons. One is, I think, the overall supply. The north is tighter, much tighter. In fact, my brother has a show list. He's one of the bigger guys around here that sells cattle for guys, and his show list is the smallest it's probably been in 3 years. We're in between crops up here in the north. The yearlings are cleaned up and the calves aren't fat yet. The south's got a little more cattle, not to say a troublesome, burdensome number, but they've got more cattle. Secondly, I think the quality offered here, the quality of the cattle in the north is better. And of course, I always like to chip in the fact that we negotiate our cattle here in the north, and I think that has part of the reason to do with why prices are a little bit better instead of all the captive cattle that are in the south.
So demand holding up pretty well here. I know we had choice boxes down just a little bit yesterday, the first time we've seen that for a while, but we're still above 310 on the choice. So certainly that is very healthy, isn't it?
Oh, well said. Absolutely, Michelle. I think you're 100% spot on. And it's the 2nd of May. I mean, Come on. If somebody's going to tell me that now's the time to be bearish beef when we're just getting into better weather, Mother's Day, Memorial Day, Father's Day, I mean, demand's going to be fine. I was going to mention this. So I noticed on the comprehensive beef numbers here just before you and I went on, a little over 11% of last week's beef went for export. That's pretty salty for beef. So I would say I'm not worried about demand. I'm more worried that the basis traders and the calf guys are going to be easy sellers and maybe still see this cash market shrinking down. I'm a little quick to report for sure, but I'm hearing that there's 172 traded here a few minutes ago in the south. So that's a little disappointing. That might be why June's down 100 points here.
Yeah, obviously we're still at a discount to that though. So, and the funds are still long. So hopefully they continue to defend this long position. But what are you watching technically to make sure that they do here, especially on the June?
Yeah, 160, keep an eye on 163 and a quarter, give or take. That would be a spot where some of the quicker moving funds would probably be a little bit alarmed. So underneath that level, I think we got to be a little careful if we get there. My expectation would be that maybe we'd hold there. Funds, people can gripe about them and talk about them and think they're, well, we just wait till they have to get out. Well, I tell you what, I'd a lot rather be on their side is to try to guess when they're going to come out. So I would expect maybe we'll find pretty good support down there at that 163 and a quarter level with the funds defending their position. It is Goldman roll coming up here. Starts Friday. Next week when we do this will be the 3rd day of the roll. That's kind of a time where often, at least I look for support to come into the front end of the market. We'll see.
What about the hog market? Higher week last week. I think the June was like $5.50 higher. We got above that $90 technical mark that you and I talked about last week for the funds, maybe to start blowing out of some of these shorts. What do you see ahead here? Is it just going to be a slow grind though, because we're still at such a big premium to where the cash index is, or what's driving it?
All of that, like you said. And then let's throw on cash hogs went up $7 last week.
Right.
Okay?
It was a big week.
I know. And then so we get a little bit of a wrinkle and we go down $3 yesterday. I mean, this thing goes down like trying to catch a falling piano. It goes so down so easy. We talked around in here that yesterday morning. We thought, do you suppose that Smithfield news is the problem? You know, the liquidating sows. You got, you know, more hogs to deal with. You know, I don't know. You know, but it seems to me like that shouldn't have been enough. But that's a fragile market over there in the hog market. I think the market macro worries that, are you going to have a reliable export business? In other words, China. Are we going to really be able to sell as much pork as we need to, because we're raising a ton of it every day? And I think that's what keeps holding the trader back a little bit from daring to step in front of the bus now.
Yeah. And I'll point out yesterday, China PMI numbers were slower. And so maybe there's some indications that the economy is slowing down. And so that might have factored in here as well. It's hard to tell, but.
Right. And you know, they you can't necessarily accept what they say as truth, right?
Truth, right.
So I wonder if their whole hog herd is in better shape. You know, are they through that poor health cycle? You know, poor productivity is always followed by higher productivity. That's way to say, you know, they may not need to buy as much pork from us.
Although I'll argue with you on that, Brad, the fact that their corn and soybean prices have been coming down so substantially, if they didn't have demand, you know, maybe that's part of it too. I don't know.
Yeah, no argument. When you're dealing with China, it's stay at arm's length.
It's a shot in the dark.
Yeah.
What it is. That's right. So grain trade, let's talk about that, because corn has had a really big slide down. Soybeans have done a little bit better, but let's talk about corn first. Looks like pretty favorable weather for planting, and Brazil has been undercutting us in the market. And so what do you see ahead here? Where do we find support in that market?
On the old crop, I think we're close, Michelle.
Okay.
You're right. China cancellations, weather, you know, export, you know, we're not competitive in the world market at all, or corn or beans. I worry that the beans are going to take a turn in the saddle here, like the corn did here last week. You know, as we adjust, not being very fairly priced in the world market. 26% planted on the corn, and a forecast. So I'm in Northwest Iowa, and forecast here that finally, you know, is going to green light everybody to plant. And of course, with our ability to plant quickly anymore with the size of equipment, we're going to get a lot done this week. And even more maybe encouraging or discouraging to price is the fact that the weather pundits are saying there's a chance that a couple of pretty big systems, you know, at the end of the week and maybe into next week, which might bring, you know, a more general rain than some of this hit and miss stuff that we've had. So to me, the weather's a little negative, new crop stuff. I would like to think that test of 575 generally on the old crop corn, though, may provide us with some support. Here, the basis hasn't budged, Michelle. We're still 90 over. You know, you can't create more old crop corn. It's tight, and it's just what it is. So I don't know if we can break this old crop corn a lot. We'll have WASD a week after next. That's probably bearish new crop, and probably remind us just again how tight stuff is in the old crop again.
So why have soybeans been holding up better? Is it just because technically the funds actually have been able to defend their long because we didn't take out support areas, or is it better demand picture for old crop over there because we had that big crush figure yesterday and whatnot?
Yeah, I'm you ask a good question. I've got a poor answer. I've been a little more negative maybe than what the market has acted the last 2 days anyway. Although, I mean, to be fair, July beans were $15 2 weeks ago and then broke down to $14. You know? So 2 up days here would seem to me to be a normal type of a correction. That's kind of the mood I'm in. We broke hard, got oversold. Now let's see if we correct a little bit. But you know, if you're a hedger, pay attention, especially the new crop stuff, in my opinion.
All right. Thanks for your time. As always, Brad Kooima with Kooima Varilek, and that's Markets Now.